So we're going to talk about AI, a couple of reports on AI. How much is the hype, how much is the reality? There have been, I would say, interviews of MIT professors and Goldman Sachs analysts. We're going to look at that. We're going to look at, obviously, what's happened in the market last week, especially the semi got crushed. There were earnings came from, two of the big, I would say, the most important semiconductor companies in the world, and it is not NVIDIA. And those companies, they got crushed uh, after earnings. I mean, one of them and the other one also got down. But I'll dig deeper into the earnings and see what do we need to worry about them, or what was it related to? So that's another topic. Uh, Other I want to quickly go through is a new letter from Howard Marks, which talks about how most of the losses in the markets happen because we are too certain of ourselves. That the biggest issue in the market is not that you don't know. The biggest issue for investors is, hey, I know, but that isn't true. So I'll quickly run through some of the summary points from there. There is another good article read about how founder-led companies outperform. So there's just statistical evidence of it. That's why I give extra points when I evaluate company to the fact that if that company is run by a founder, right? Yeah, I guess few of those things. So you let me know anything else you want to cover or talk about, and we'll go that way. But yeah, these are the things that I have on my agenda. Let's get going. Cool. All right. Welcome to session 238 for our group. Glad you guys are here. We're gonna spend maybe close to 2 hours looking at the markets, what happened last week. Not that it changed our perspective a lot, but yeah, and what's the earnings coming up? A couple of things I want to talk about: AI, semi earnings, Howard Marks letter, and things like that. Any questions? Feel free to pitch in, ask questions. That will be fun. Otherwise, I will run through the document. Cool. Or if you want to put your question on the chat, that's fine also. All right, so let's look at this week. This week was a pretty, I would say, active week. It started the action started on the last weekend itself. We saw former president, and maybe I think the markets are predicting that he probably is the president elect. He got shot at, attempt on his life. Don't see that happening, and it's happening in the, I would say, what, the number one country in the world. Pretty shocking. uh, in terms of the amount of fail the Secret Service, how they failed to protect. But anyway, so that happened. And then near the end of the week, we had a software patch that blew up the IT systems all around the world. And then we saw tech sectors crumble. Regional banks are like moving like they've never moved, before. Small caps are now, running ahead of the large caps. So far, all the gains were very much concentrated on the large caps, but now we are seeing the small caps had a great run over the last, I would say, 10 days. And action is not over. Now we are entering into the second earnings season of the year. So all the companies that have completed their books will be reporting earnings. It has already started. The earnings season started kind of last week. But majority of the companies that I focus on will be start to report from this week onwards, right? So yeah, a lot of action. I guess next 2-3 weeks gonna be heavy on earnings, which is gonna be fun. I always love to go back and review what the companies have done, and from an earnings perspective. Cyrus is asking, what do you think about the dating apps, Bumble, Match, as they are down 80 to 90% and revenue is still stable? So I think there is Bumble. I'm not too very keen on because when Bumble started, they came IPO in 2021 or 2022-ish time frame. I remember going through their S1. Their whole USP was that they allow females to make the first move, right? If you're a male, you have to wait until the females make the first move, and, and I may be using words incorrect words, so pardon me. I never used any of these dating apps, so I don't know what the exact terminology is. But you can't contact a lady directly on Bumble. The lady has to initiate it. That's all I meant to say. And they were mainly focused on becoming more provide more safer environment for ladies, and that was their USP. And of course, all these dating apps, they 2021 or 2020 COVID time, they all did great because what else are you gonna go and meet? If you are looking for a dating partner, where else are you gonna go? Restaurants were closed, and so the only way to meet was online, and so these dating apps took off. After that, once economy and the COVID restrictions were removed and life is back to normal, we have seen the traffic on these, the have hasn't. I mean, obviously, it has stabilized. So all the, I would say, the pricing of the stocks, which was based on the amount of the continuously the heavy traffic that they will be able to generate, hasn't materialized. And I guess very recently I heard that Bumble will now even allow men and the males to make the first move. And I don't know, where did I hear that? Maybe in a podcast or something. And I was driving with my daughter, and I said, then there is no USB. How are they different from any other one? Right? So I will not go and look into Bumble. I guess the only companies that you may want to look in on this one are the biggest ones. So Match, again, I'm not analyzed Match in terms of their performance, etc. But I won't go with anyone which is a smaller company. So what's Match? How is Match done? Let's look at Match. So revenue growth after 2021, you're going to come back to normal. It's like 5%, 8%. Not much of a, this is not a growing company, right? So first of all, that's it. It's not a growing company. Yes, it's fine. They're buying back shares. Okay, gross margins. Balance sheet looks to be bad. Balance sheet is fine. They got 914 million cash. Not much of a law. No, they do have a big long-term debt, which is a problem, and they've been losing money, so they sitting on a negative retained earnings. Cash flow perspective, oh gosh, 250. So this is what I don't, it's almost $254 million of share-based compensation, which is okay, 10% of the revenue. Yeah. So it's not a P is 15. Match may be okay. You're not paying too much for the company. It is still trading at a level that is cheaper than the market. But it is for the fact that they're not growing much. So don't expect too much of growth in this company, at least for the last 2 years that we have seen. But it's not at a ridiculous valuation. Okay, so that's my a quick 2-minute summary. Maybe next week. So currently, I'm working on to kind of put down a way for me to little more formalize my analysis, which is, if you recall, long back we have looked at um, some high compounders. We looked at how to find high compounders, the characteristics of high compounders. Then I was also looking at some of the criteria that some great fund managers use, and I was trying to figure out how to put together everything together in a way which becomes easier for me to analyze any company. So next week maybe I will run the match through that process, and will bring in more thoughts around how match is. But I think match is still fine. BMBL, right? What was Bumble? BMBL?
Yeah, I was looking at mostly Bumble because it's like almost one-time sales right now.
So if you're looking at Bumble,
And they like fired 1/3 of their workforce, so they're not going to give any like stock-based compensation.
yeah, not growing much. Let's look at hardly any operating income. Yeah, but still, I mean, 5% of operating margin, and you're for a tech company, which is generally a capital light company, that's very less. If they improve their profile, great. I'll be will be happy to look at and see, maybe investable. Right now, yeah, I won't invest in Bumble. They are trading at I get it, is trading at like one time of sales, but we have seen many companies trading at even a fraction of sales, right? Which company did I bring up like 2 or 3 weeks ago? They had what? 50 million uh, $50 million of sales, and was trading at like 700K, and the company went bankrupt. So I'm not too, because you can always sell everything for free and can increase the sales. So I'm not too keen on this one. I'll only look at this if some of the other aspects are, if I'm positive about some other aspects. Yeah, I don't know how long Bumble will survive. So it is a risky play. If you want to play with that, sure, maybe some portion of your company, sorry, some portion of your portfolio, but I won't touch Bumble. You know, not really worth taking the risk. So okay, let me 1 second. I think while we talk, let me just bring up the profile for Bumble, and then we'll go from there. Let me start to refresh it. Okay, any other? Can you analyze the market drop for the last 30 minutes? Last 30 minutes of last Friday. Uh, I don't know what happened in the last 30 minutes, because I'm generally not in the market in the last 30 minutes. I actually leave my, and that's my intentional, is unless I have something which I need to close in the market, I actually moves out of the market in last 30 minutes. Around 12:30 I get off. So I don't really know. Did anything specific? Did the market drop a lot on last Friday? Last 30 minutes? So someone was telling that there were a lot of one thing could be there, because Friday is the expiration date, and if all those folks who were long on tech, or long on calls, maybe trying to just salvage the position. I don't know, because I really wasn't looking at the market on what happening in the last 30 minutes. And even if something happened, I won't even focus on What was the reason? Right? Who cares about 30 minutes? Okay, 7:12 or 12th. I have no idea. I don't know, forgotten what happened on Friday. Right. In a larger scheme of things, right? A day doesn't matter anyway. Right? So I have no idea what might have happened.
I think Trump got shot.
No, he got shot on the weekend, not on last Friday.
Not 7/12.
No, he got shot on 7/13.
Oh, okay. Well,
Yeah. So I know Trump got shot at over the weekend. So maybe if there was something, maybe I would have talked about it. If there was anything very special I would have then maybe talked about it in last Saturday. I don't really recall. Sorry, I have no feedback on what might have caused anything in the last Friday. Okay, let's bring up Bumble, right? So I just ran it through something that I've been working on is try to get a quick analysis, right? So this is what we have talked about it earlier. Now I'm trying to put together, make it easier for me to analyze it. This is which is high compounders. There are some characteristics of a company that compound its value over a long term. Majority of them is red. So it's not a high compounder. That's fine, right? Now we're looking at it's trading at a 5 PE. Forward PE is 5, so not super expensive. PEG ratio is 0.5, which is great. If a PEG is less than 1, it's great. It is great. Sales is something wrong here. Does it not get the right info for Bumble? Well, let me see. Where is BMBL? Income annual. Say, where is P? This Bumble is okay. All right, maybe I forgot to refresh it. So we'll come back to it. Come back to Bumble once I have the updated data. But this is how I want to analyze it, see if it's a high compounder or not. And this is like some of the rules that Buffett looks at of a company in which you also get some decent, margin of error. And then I look at some of other things that I want to focus on. Some 12 parameters, I call them sexy or dirty dozen, depending on how the information comes out to be. And so Bumble has now been out for 5 years, right? So let's look at 3 years. Okay, this is now refreshed. So 70p, 80p is super expensive. Forward P is fine. Sales is $1 billion of sales. Almost no long-term debt. Super more volatile than the market. And the price to sales ratio, if I'm looking at, this is 1. So from that perspective, it's fine. 980 employees. So far, stock is down 40%. Is it a high compounder in which you look at is gross margin higher than us? Like I think it's 60% is my threshold. Return on investment 0. Insider ownership a lot. Doesn't pay dividend. Operating margin is very less. This is trading 12 months. Profit margin barely. Sales has been growing, but 20%. Right? There are many companies which are better, grow their sales in much better fashion. They are capital light, right? And real cash flow, at least last 12 months, they've been able to generate some real cash flow, right? That's how does it does on Buffett's scale, right? I would look at spending a lot on their marketing, right? 66% of their net profit is eaten by their marketing and sales and marketing budget. Super high payment for the taxes. Lot of they still have a debt for which looks like their interest margin is 40%. No EPS because there is no net earnings. They have a debt which is almost like half of cash. Debt to equity is fine. They're growing some retained earnings. Looks at 3-year average because this goes only 1 year. I'm looking at 3 year because 1 year you really don't know. Something companies may change how they behave for 1 year. So I want to go back and generally want to look at 5 years, but Bumble has not been around for 5 years. So I look at 3-year data. ROIs is negative. They've been issuing more shares, negative 8% operating margins. If I look at average of 3 years, which is not good. So, and let's see, currently it is trading at what, $8.82. But no estimates from analyst as well. 5 years estimates. Okay, so we got only what, 2-3 years estimate. EPS growth, let's pick up 2416. I'll pick up midpoint, which is, let's say, 20%. They've grown their free cash flow over 3 years at 62%. Revenue growth is 25%. Whereas one good thing I like in here is that the revenue has grown, but the market capitalization has come down, right? So it means, I mean, sometimes you do want to look at is the, like, in terms of euphoria, you will see companies' market cap growing like crazy, whereas the business has not performed. So in this case, market cap has grown less than what the revenue is, right? So it is a riskier company, so I would want to give it a 12%. I don't know. Currently, in the market, I think based on today's, right, the intrinsic value of this company should be around $12. They're trading close to $9. But so I could say that, hey, maybe currently it is a little cheaper, but the business is not that great. Right? So I don't want to spend too much time or put my money behind Bumble. There are many companies which are way better than what you could find here. So I'll probably bring up, I think I do have one for Google or Meta. I found another company which I knew I don't have a position in, but when I was running through the rubric over the, this is the day before yesterday or yesterday, while I was trying to build this out, I found Arista Networks. I'm like, why don't I own this company? Let me answer the question of tax margin. What was in my tax margin? I think it's the amount of a tax divided by your, no, it's your income tax divided by your pre-tax income. So I don't know. Maybe they might have had some deferred income tax, etc. So that's where the tax margin comes out to be so much. So since I talked about it, let me bring up Arista Networks. Right? And I know some of you actually talked about Arista a while ago. So thank you for talking about Arista Networks. So I am a visual person. When I see a lot of greens, that tells me, okay, this company is doing great. Only thing I need to look at is, its valuation is a concern. From a business side, things look good, right? I don't have to worry about it. Only thing that I need to worry about is the valuation. Now I can think about, do I really want to pay 35% and run through my, reverse discounted cash flow to know about it. But I think, so this helps me in looking at from a first look, I look at if the business is good. If yeah, then I'll talk about, how about the valuation then. So at Arista Networks, it is currently trading at high valuation. Maybe because it's a great business. You can't find great business at cheap valuation. So Bumble is trading from a valuation perspective, it looks cheaper, but then the business seems to be an issue. There seems to be an issue in Excel formula for tax. No, this tax margin is different. So this is not the tax margin that we generally see reported in a financial statement. This is a tax margin which Buffett looks at, which is basically, I'll have to go back and look the formula was. I think it's a pre-tax income divided by the tax paid, etc. So if you look at a Bumble, you should be able to see it. Where's my where's it? Oh, I'm on income sheet. Yes. So what's my pre-tax income? 2.96. Income tax is 7.16. That's why it is showing up as whatever 300%. Yeah, so no Bumble. Yes to Arista networks. Do you manually input these values? No. That's what it's slow. I'm trying to figure out how to speed that up, but it is automated. I have to refresh it and it goes out on the web to fetch the values. But damn it's slow. And I've been trying to figure out asking Chat GPT and the web on terms of how to make it faster. Probably I need to spend some more time on it. All right. Will business-friendly Modi impose a billionaire tax on India's ultra-rich? I have no idea. I've not been following what's happening in India, but I wouldn't be surprised if we get. I mean, very few people are actually taxpayers in India. So if they are, I don't know. So I have no information on what is Modi doing in its latest. So
Vivek.
Yeah.
I think Elon Musk's reason for moving X and the larger and SpaceX to Texas is bogus.
Sorry, Elon's what? Movie?
Elon Musk is moving X, Twitter, and SpaceX to Texas. And he says the reason being is because of some transgender. That's
Yeah,
bullshit.
I know. Yeah. So
it's dangerous.
So I don't know. I mean, Elon will do what Elon will do. He moved Tesla, and I know a lot of other companies have moved out of California, not because of this particular issue, but because of it's very difficult to do business in California because of regulations, etc. And other states have a better business-friendly regulations. So we saw HP have moved their headquarters, Oracle has moved their headquarters, Tesla has moved their headquarters. So won't be surprised if, SpaceX or someone, they move their headquarters out of California. How do you position size in a certain stock? I don't let any individual stock be I've not even reached that stage. But let's say once I reach it, let's say more than 15%, probably I won't let it to be more than 15%. But then when I look at, so let me talk about it first at a portfolio level, right? So 60% of my portfolio and again, not like say between 60 to 70% of the portfolio value that I want to hold it in either the ETFs or mega, like a high compounder, well capitalized companies, right? Let's say 60 to 70% goes over there. Now, 25 to 35%, I want to hold it in the growth companies, which means, they are not, let's say returning. They're investing everything back in the business. So those are like a teenagers one, right? The 60 to 70% are the adults. And some of those adults may be at, approaching their old age. They are starting to pay the dividends, etc. 25 to 30% is in the, let's say, young adults or late teenagers, like mid-20s. Yeah, they have a lot of promise, but I don't know how they will behave. They have a promise, but I want them to show me that they have they are really capable of delivering on their promise, right? So those promising companies is what probably will constitute my 25 to 30% of portfolio. And then between 5 to 10% will be the ones that they've just came out of mother's womb. I have no idea. I only think maybe they can someday become superstars, because they're trying to address a problem that has never been addressed. Some of the company may not even have any revenue. Some of the company are just working on a technology, and if it becomes successful, who knows when it will be or whether it ever will be. That will be maybe 5 to 10% of my overall portfolio. And I am well aware that all that could go down to zero. So that's how I'll constitute my overall portfolio. And then individual level, if the company is solid company, then I'm okay to have a bigger portion of my portfolio. I was not looking at that way in 2020, 2021, but I learned my lessons. And now if the stock is going higher, but I see that the business has not performed, I'll start to trim it. Right? and not let's say the young adults or late teenagers to become a big part of my portfolio from a portfolio value if the business has not graduated from the teenager level to the adult level or to the mature level. So that's how I'll set it up. Now, at the end of a month, I'll show you top 15 stocks. I think all the top ones are either ETFs or are the company that generate huge amount of cash, right? Google, Meta, Apples of the world, Berkshire Hathaway, SPY, IWM. So that's how I'll structure my portfolio. What are the Indian tickers in the US market? Yeah, Ravish has given Infi. TTM is which one? HDB, I know is HDFC Bank. I don't do individual Indian stocks because I don't follow the companies out there. So I just get my exposure through ETF, which are specific to India. INDA is my TTM is Tata Motors. INDA is my go-to ticker because it is optionable with not great, but it's better than the other tickers that we have. There are other tickers also. There is SMIN is there, INDY is there, and I think there is something specific to e-commerce also. So any high growth tickers? High growth tickers. What do I hold? Okay, there are a few which I hold, and let me. So one is JMIA. I talked about this because the stock has suddenly became 300%. Business has not caught up, and we talked about this company last week. And I did trim my position. When I'll talk about which are the companies that I sold. I did sell, trim some of my positions here. What else I have? I have this Nanox. Still work. They've been around for 7-8 years. Still working on the tech. Almost zero revenue. Which others? I don't look these companies unless they have done something really different or the stock has moved, because these companies will take long time. They are like kids. Either the markets are not mature or they're working on really solving a difficult technology problem, and that might take long time to show any revenue. So let me go back and what's it? Okay. All right. Clear. Moonshot. I call them moonshots. What else do I have in moonshots? I have some of these crypto ETFs. Those are my moonshots, right? FBTC, ETHE, ARKB. These are all moonshots. Because you never know, maybe after a year or two, I might move crypto into growth side, but right now they're still moonshot. I guess maybe I should remove Bitcoin from moonshot because now government is not going to ban it. BlackBerry, I hold, which is still in a moonshot phase because that's the company has been around for 40 years. They haven't got their act together, but if they can, it could be a great it could become a good company to own. What else I have on my moonshots? Yeah, I guess these are the, yeah, some of these crypto ETFs and Jumia and Nanox and BlackBerry. Those are the ones which I call as moonshots. So are you holding Nanox? Yes, I am. I am. I am. I keep selling, one or two contracts of calls to reduce the cost basis, but I'm holding because here's the deal. They are still making progress in the business. They got the FDA approval. So existential risk is over. Now execution risk remains. So I will go and review every quarter how they have made a progress, what's about maybe we'll talk about it when Nanox releases the earnings. So I do maintain the information on how they're doing on the business side. And you know, if it works well, then it'll be a good company. Again, you have to make sure that you position size it accordingly. Right? If it goes to zero, should be fine. I mean, I won't be hurt. How do you identify Jumia how did you identify Jumia to invest in? I was looking at some of the e-commerce companies that are addressing e-commerce space across the world. So when I was looking for those companies, obviously in US it's Amazon, South America it's Mercado Libre, Africa it is Jumia, Southeast Asia it is C Limited, and China obviously there are Alibaba's and the JDs. South Korea it is Coupang, and that's the reason why I looked at it. And then I looked at obviously it's a hard problem, so you have to have a 20 years of patience with this. I'm in my fourth year with Jumia, so I'll hold it. Now, Jumia TTM is -4%, is indeed a growing company. So Jumia has gone through many cycles of business strategy changes, and now the recent change that they did was to move away from the CPG goods to going back to the selling more electronics goods. Number two, if you're looking at just the dollar number, they're hugely impacted by the foreign currency changes, right? So also you need to neutralize the foreign currency impact. But like I said, that's why it's a moonshot for me, right? So my position size for Jumia is small, but so far, they were like the teenager was bent on committing suicide, but thankfully the new CEO came in and he cut costs like anything. They moved their headquarters from Dubai, not headquarters, but a big offices from Dubai to back to Africa, had all their employees come back to Africa and cut costs like anything. Was it the last quarter before that, they cut their operating costs by like 80%. So yeah, they are fixing the stuff. So gotta be patient. Is Jumia at the resistance level? I have no idea. I mean, again, I look at is the business is performing, and my outlook is for next 15 years. How do I care whether right now it's a resistance level or not? Though I know that the stock has run up too much because of an analyst coverage. Analysts don't even cover Jumia. I logged into the earnings call and there are no questions from analysts. Suddenly, I know that one of short sellers, Muddy Waters, was it Muddy Waters or it's not Hindenburg? I think it's Carson Blacks. Maybe it's Muddy Waters, someone else. He had a positive. They moved from being a short seller now to a long. So now he takes out, gives the analysis report on the stocks is going long. So I think last year he became long on Jumia. That's the only institutional player that I know of that actually tracks Jumia. But this 2-3 weeks ago, I think 2 weeks ago, another Wall Street firm initiated coverage with a price target of 14, and the stock has, if you look at stock has run up like crazy over the last 2 weeks or so. And I did talk about, I'm like, in 9 days, it's up 84%. Year to date, it's up like 200, almost 300%. So it doesn't make sense. I know business has been improving, but not so much. But that's why I've been like selling calls like crazy on this one. AEHR, I've heard some good things about AEHR, but I have not looked AEHR as a company. So yeah, I'll take a note of that. Let's see if we can AEHR. AEHR. Okay, so I'll take a note of that. Do you have any offline chat group we can continue to chat online on daily basis? I have a Slack group. I think it's on the Meetup, right? The link for the Slack is on Meetup. Hold another. I'll give you the link. But generally, it's pretty quiet Slack. But if you ping something, yeah, I'll respond it. I am not a kind of a day trader, so I don't really look into what's happening on day-to-day basis. So if you're looking for, hey, is there anything for today? I might disappoint you. Oh, come on, where's the Slack link? I think maybe I have it in one of my bootcamp presentations. Let me pull it up from there. Do you have that? Yes, I have it here, right? All right. Okay, let's get back to our. So we also had CrowdStrike blowing up the world, right? Yeah, a small patch that they had released. It brought down all the systems. If you want to know all the details of what happened, there are a couple of links I can share. So you can go to CrowdStrike's blog, and they're given. And I think as of yesterday night, I like the transparency, especially now. They've given the root cause of so far what has happened, what were the details of what happened, and they still have to do the root cause analysis on that one, right? So one file that got pushed out between a certain time period, and if your system was up and connected, were impacted, they gave a workaround steps. All that is fine. Stock got punished. It was down in the morning when I got up. I saw that the stock was down like 22%. Right. So, which is, I have some position across strike, but I was not able to buy it, or like I didn't want to buy anything above 320. And so I've been like waiting for it to come down. And finally, when it was like down below 300, I added to my position. Could I be wrong? Sure. Right. But I was just thinking, maybe is it like what happened with Chipotle with the rat scare when the stock was punished? And if the company is good, they'll fix it. I think CrowdStrike should recover from here. It might take longer than what you might be anticipating, but if anyone can solve it, George Kurtz may be the right person to do it. He's been in this space for years. Right? He worked in McAfee, and now he's the CEO of CrowdStrike. So I'm like, yeah, I should buy it. I think in the long term, this thing shouldn't matter much. So I picked up some CrowdStrike. But that's what happened on what was it, Thursday or Friday? Option put sellers were burned on Friday in CrowdStrike. No, or the other way it is that they got to buy it at the price that they wanted to buy. Right? Hindsight is always 2020. So forget about what happened on hindsight. But options, yeah, those who had bought or those who had just had a puts just before this crash, yeah, that would be fun for them. I saw another chart which I do want to bring up because we focus so much on the growth. This is the common stocks with the highest cumulative returns. And that on the top is Altria. Right? I'm not going to invest in Altria for my own reasons. Cumulative return, compounded, return, annual compound return is like 6.29%, much better than any of the other companies that we know of. Now, the question here is, I mean, when I saw this chart, I mean, it proves that the revenue growth is not a holy grail. Like any other new investor, I always used to chase revenue growth. If a company is growing like gangbusters, yeah, it's okay to pay up for it. I've started looking at more other parameters, and that's what you saw when we looked at ANET or a Bumble. Yeah, revenue maybe in case of a Bumble, revenue wasn't even growing that much. But even if the revenue is growing, that really doesn't mean that the long term the company will perform. Right? Even with a slow growing revenue or a moderate revenue, if the company can survive long enough, the compounding will do its magic. Now, none of these companies are the ones that you will associate with huge growing revenues, but they've been around for long. You don't have to look at the fastest revenue growth or fastest ROI company in a particular year. I would rather say maybe be a bit scared because that company may be like, either if you're in a car, you're driving too fast, you probably will crash at some point of a time. Drive at a normal speed and focus on driving for long period. You will reach much farther. So what we need to look for is the companies with the resilient business models, optionality that will allow them to continue maintain their position or grow their business. And even if they give smaller, any particular year the returns are not, let's say, in the top decile, it's still fine. Same is the case with the funds. Right? What was the study that I brought up many weeks ago? Is there are funds which have never been in top 25% at any given year. Right? But if you look at the overall period of, let's say, 40 years, those funds are in top 5%. Because normal returns, longer period of time, compounding will do their magic. What happened to those who have been in like top 1 or top 10 percentile in any year? They crashed and burned. The fund manager probably took more risk than necessary to be on the top, and hence they didn't have the longevity that's required. So that's why I want to focus on other aspects as well. Bobby, where did you get this information? I don't recall the source, somewhere on Twitter, but I know that Altria is the best performing stock. So when I saw Altria, I looked, okay, this is genuine. Okay. Rotations, I saw some rotations. Regional banks are on fire. This is like a 6 standard deviation move in regional banks. Now suddenly I think the market is like, okay, don't worry about regional banks. They are not zombie banks. All the commercial real estate problems have been solved. I don't know why. And what happened last week? Is it all euphoria of Powell cutting, the Fed rates coming down is now more certain than it was earlier. And that's driving up some of these so-called zombie companies or the zombie sectors, right? So regional banks, which have been crushed because of all the CRE concerns, are now back up. Tech is down like 5%. QQQ is down 5% for a week. And if you look at Russell also doing great. I mean, maybe just this week, Russell has come down. But if you look at over the last 10, 15 days, like after Jerome Powell's statement, look at the moves that Russell has made. Right? This is an ETF. It's not even an individual company. This is an ETF. You don't see these moves like these in an ETF. Right? KRE, which is a regional banking ETF. It's like crazy. They are behaving like a meme stocks. Right? So, and we saw, moving basically the tech sector under pressure after the semis, basically the statements from the government. So we will talk about it. What else? Last week of performance, all the reds that you see are the stocks that have run up. So till date, all the stocks have had a good run on the markets. Microsoft down 3%. Nvidia is down almost 9%. Broadcom 8%. Broadcom had a split. So looks like the magic of going up after a split didn't work for Broadcom. I don't own Broadcom, so I will. AMD is down 16%. So if you think you missed the boat on AMD, because AMD was trading at $180, wow, what, $200 some part of a time. Now you can get it back at $150. If you had it in your watch list, that's why it is important to have some of these things in your watch list, so that if it comes down, you may be able to buy the stuff. Like Crowdtstrike was on my watch list, so I bought some. AMD, I have not analyzed it yet, so I don't know if I should buy it here or not. Sam is asking, with these new highs, aren't you fearful of excessive exuberance? I've been talking about little excessive exuberance for many months, but market has been proving me wrong. What do I know anyway? So I'm not gonna move, in either direction, saying, oh, I know that it is excessive. No, I don't know. It feels like excessive to me, so I'm trying to hedge my deltas. But what's the saying? Saying market can be, I forgot that.
It's like irrational.
Irrational longer than your portfolio can be solvent. Yeah.
Yeah.
Right. So yeah. So you never know. AMD is always lagging. So any case, I mean, we're seeing this. For me, you guys know, I had sold some of my Nvidia positions, and I think at least I learned something new, and that's the fun is you always keep learning new. With the way I dealt with my Nvidia position is like I can sleep peacefully. I don't, because I sold some, I have kept some. So if it continues to go high, at least I get a peace of mind. I still hold something in my portfolio. But if the Nvidia keeps crashing like 9-10%, it is crashed this week, I get a piece saying, oh, glad that I sold 2/3 of my position. Right. So I think I'm gonna use kind of a similar stuff wherever some of the stocks that I hold are gonna go up too much too soon. Like Jumia, I almost did the same playbook, the one which I done with Nvidia. Okay. It helps me to sleep well. No investment is worth losing your health or your sleep, I would say. Yeah, Nvidia down 10%, it's fine. Sector wise, still even after this red week that we have seen on the tech side, still the tech and the communication are the leading ones. S&P is from 18% now down to 16. One change that we have seen week over week basis, real estate is back in red. Oh, sorry, back in green. It has been in red for all these weeks, but this week it turned into green. So overall, all 12 sectors of S&P are green. And it's like 16%? Still a great return, even after whatever we have seen last week. Just expand your timeline. Imagine that, you went out on a holiday, you had no access to internet, you come back, and while everyone Twitter and in these meetups we're talking about, oh, the market has crashed and everything happened, it's in deep red, Nvidia down 10%, you're like, what the heck? I'm up 16%. so great. I mean, there's nothing to complain. For what happened in just this week, right? How does a week matter? We are still up 16% for the year. Fear and greed is still on neutral. I'm waiting to turn it to fear so that I can start selling some puts and maybe try to increase some deltas. But otherwise, I'll just be neutral. So that's on a big market side. Anything else? Crypto side. Ethereum ETF should start trading next week. I heard the July 23rd as a date on CBOE, but what I didn't see is any approval from SEC yet. So I was a little confused of how can we have a date available when the SEC hasn't approved the S1. So today morning, was it today morning? Yeah, I guess today early morning. I think again it came on the CBOE expecting that SEC will give their final approvals on Monday, and then on Tuesday it will start trading because the final comments, the updated S1s after the last comments from SECs were all submitted by the issuers this week, and that should be it. So issuers are expecting approval from SEC anytime, maybe by Monday. I don't think they work on a weekends. So Monday they'll get approval, and then I think everything else has been lined up with the exchanges, etc., for the ETFs to start trading from Tuesday onwards. So that's an update on Ethereum ETF. Nothing much happening on crypto side. I mean, the regular developments continue to happen. I didn't see any other news of some major upgrades, etc. There is a conference happening on it that happened on Ethereum in Europe. Other than that, nothing much. And there also, I didn't see or maybe I'll need to go through and see if there is anything from a protocol perspective, any big changes that are happening on protocol. Then maybe we'll talk about it. Right. But there are 1, 2, 3, 4, 5, 6, 7, 8, almost 9. Oh, this one is being converted. So probably 8 new ETFs will be available to you on your brokerage platform. So now if you want to gain an economic exposure to Ethereum, you don't have to go to Coinbase or Kraken. You can buy it directly from your brokerage firm. With these tickers, they will be available, hopefully started trading by Tuesday, is what market is expecting. So we also looked at that Bitcoin is on path to recovery. Donald Trump will be speaking in some Bitcoin conference. And now, after the incident that happened last week, it's kind of market is almost certain that he is going to be the next president. And now we're going to have more crypto-friendly president. So a lot of these crypto, especially the biggest one, Bitcoin, is on path to started to recover, and FBTC, which is a Fidelity's Bitcoin ETF, is up like almost 17% in 10 days. So I think it's a good time for crypto economy. And I also saw SEC has withdrawn cases that they had earlier filed against some of the companies that operated in the Ethereum ecosystem, which is also good news. So SEC told we don't want to pursue this case anymore. So I think they are seeing the writing on the wall in terms of who will be in the White House, and don't want to, go against. I know they should not be politically motivated or impacted, but president wields some power anyway. So Gary Gensler days may be numbered, and depending on who will be the next SEC chairperson, we might see some more tailwinds out here. Anything on a crypto? Any questions? Anything you've been tracking or trying to get some exposures?
Hey, Vivek, I heard Trump is attending some conference next week. Do you think we'll crypto gap up the next week?
Yeah, so I know he's speaking on a Bitcoin conference. I don't know, is that a next week or when? But that's why we've seen the crypto is up like 10% over past few days after Trump.
Option volume for Coinbase is like insane last week, especially Thursday and Friday.
Yeah, look at Yeah, and I think that's why Coinbase, like on Friday, I don't know what happened on Coinbase. Like it's up nicely on Friday. So all I guess those crypto adjacent companies like Coinbase, etc., will also benefit. And I don't think I have a screenshot of. Oh no, I do. Like custodian. Even if you look here, except couple of them, Vanek, which is custody by, and this will be Fidelity. They're gonna do their own custody. I think in the US, the by default, the custodian services for all the crypto is gonna go to Coinbase. So the same thing we saw on a Bitcoin, except a couple of Bitcoin ETFs, everyone was using Coinbase as a custodian, which I like because they diversify the revenue base of Coinbase. They don't have to depend only on a transactional revenue because that revenue is very volatile. When the markets are going up, all the retail investors, degens, they will go and we trade more. But this custodian revenue is like your boomer's retirement account sitting with a brokerage firm, not gonna move it. So I like the fact that Coinbase is becoming a de facto standard when it comes to providing custodian services for all the ETFs. Right. And now they're talking about waivers. So if there is no fee on Grayscale for 6 months, Franklin Templeton waiving fee till January of next year. Vanek is 1 year no fees, 6 months no fees, 6 months end of a year. So Fidelity says, I don't care. It's only valid for a few, like till end of this year, no fee. And then iShare says for 12 months. Even after that, the fee are, I would say, I don't like this 25 basis points. I think anything below 20 basis points, that's a reasonable one. So earnings coming up next week, and let's look at which are the ones that sounds interesting. I'm looking at Monday. Okay, nothing that I need to watch really closely. Okay, General Motors on Tuesday. Tesla. Oh, Tuesday gonna be fun. We got a Tesla, Alphabet all together, and then Wednesday. Nope. Ford, I hold in portfolio. I look into service now. I guess. Yeah, that's it. So maybe week after that, we'll have a lot more action on other companies in my portfolio. But the earnings is here now. Earnings season is back. So that's for the earnings. Yeah, let's talk about some mindset discussions around investing, because after now being an investor for years, only thing I realized, the best thing in investing is the mindset, which is EQ, which is way more important than the IQs or trying to figure out the learning the balance sheet, etc., anything. So I do want to pay some attention to investing. First one, and Morgan Housel, he runs a fund. It's called Collaborative Fund, and he's written a couple of books. He's been award-winning writer, and he's a great speaker, and appears as a guest on many podcasts as well. I like his way of writing in terms of for investing. So saying I'll be greedy when others are fearful is much easier than actually doing it. So how many of you actually bought? You can look at yourself and see how many you actually bought the dips on AMD because you always wanted to buy AMD when it reaches 150, right? No, right? It's difficult to do but easier said than done is I'll buy it when there's a bloodbath in the market. Second quote, the gulf between a great company and a great investment can be extraordinary, which is true. Because many of us, and I specifically, come from a tech industry, we pay too much attention to the tech side of the world. This technology is going to change the world. But that's fine. Or this company is going to change the world, but that's fine. It still may not be the great investment. We have umpteen examples, and then we always fall into the same trap of, oh my God, it's never been done before. It's a revolutionary tech. Right? Great, but it may not. So from a technologist eye perspective, it's a great company. From an investor perspective, it may not be a great investment. Right? Airlines, they changed the way we move, right? They completely transformed many aspects of business and personal life. Horrible investments over a long term. Same is the case with the railways. Over a long term, there was a period when railways were great. Over long term, not such a great investment. So let's not get carried away by the fact that it's a great tech. It may not be the great investment. Markets go through at least one big pullback every year and one massive every decade. So get used to it. Very true. Don't have to complain about it. There is virtually no accountability in financial pundit arena. People who have been wrong about everything for years still draw crowds. Right? Cathy Woods. And I guess everyone gets it right once in a while. And after that, doesn't really matter. You still draw the crowds. Time-saving tips. Instead of trading penny stocks, just light your money on fire. Same for the leveraged ETFs. And it pains me to see that many of the investors, they are more interested in penny stocks than buying the great businesses that you can buy. And I've been asked anytime go and attend some new meetup. There's a lot more interest if someone starts talking about penny stocks. You will see a lot more interest, and the person will be surrounded by other investors on. Wow, that's great! I can buy like in $100. I think there is something to the quantity. If I can spend $100 and I can buy 500 shares, that sounds much great. I feel much better than if I invest $100 and I get only 2 shares. I think that's what attracts a lot of investors, especially the new ones, onto the penny stocks. But there is no better way to light your money on fire than just trading in penny stocks. And same is the case with leverage ETFs. So this is Morgan Housel's code. I know leverage ETFs, I've been talking about it for very long time. And I've got one more simulation to share with you on leverage ETFs. Those who have seen this before, my apologies, but I keep getting these questions on leverage ETFs. People keep running behind leverage ETFs. So I thought we'll share something. I did some improvement yesterday. So there's something new even for those who have not seen this before. So I tried to run a simulation on leverage ETFs. Holding period, different one, 120 days, 60 days holding period, 30 days holding period, 10 days holding period, 5 days, 3 days holding period. It is a place in investing. That's why issuers create it. But you should not hold leverage ETFs beyond a day or couple of days. Reason is of how it is structured and continuously will lose value if the stock is volatile. So I'm running a simulation which says maximum volatility could be 20% up or down in any given day, right? This is what 2x daily leverage, 1.5x daily leverage, inverse 1.5x, inverse 0.5x. Okay. And basically use a random generator function of Excel to generate. I start with $100 And then you say how these behaves. And right now I have 51. So 57% of time, the stock has been less than $100. Right? In that case, my inverse, and it finished at $84. It is down 16% after 120 days. So if you are holding an inverse leveraged ETF, it should do great. If you're holding stock is down 16%, and for majority of the days, it's been down. Oops. It looks like I moved something. So let's take a case of this one, right? It's down 6%. Your inverse leverage ETF is reduced to a single penny from $100. Let's refresh it. Stock is up 6% at the end of 120 days. Your 2x leverage ETF is not up 12%. It's down 96%. Reason is this volatility that you see in the blue color, that kills the leverage ETFs. Longer is the time period, longer is the impact. Here, you have a 56% of the time, the stock is higher than when you bought it at $100. And it finished the 4-month period at 105. Still, you lost 94% because the end value of your 2x leverage ETF is 6.26. 1.5x did better, $38, but you still lost 62% of your wealth because you held the leverage ETF. Okay. Is this surprising for anyone? You need to understand how the leverage ETFs work, how the daily tracking mechanism impact. Right? You move over to a smaller period, you still will lose if the underlying is volatile. You lose less. In this example, your stock is down almost 19% after 2 months. And on inverse side, you still lost almost 97%. I'll go to much lower period. Here things look a little better. 20%, again, this is like holding it for 10 days. Stock is up 4%. You still lost it, but not that much. You didn't lose like 90% of your value. You lost only 40% because the stock is volatile. If you buy a leveraged product, then you have to be sure that the underlying is not volatile. Right? It moves in one direction for quite some time. If it keeps going like this, you're just gonna lose tons of money in holding leverage ETF for longer period of time. Hold it for a day, hold it for 2 days, have no issues. Don't try to inventory leverage products. And that's what Morgan Housel wanted to say, right? Investing in your penny stocks or investing into leverage ETFs means you're buy and hold leverage ETFs. You're just lighting your money on fire. 3 days, even better. These products were created to hedge overnight movements, overnight or maybe one event. You want to buy a leverage inverse 3x ETF on SPY just before election because after election the market will crash? Sure. But then don't buy and hold it for maybe let me wait until the president is sworn in 2 months later, right? Even if this market crashes 2 months later, even if the market is lower than when you bought it, you might still lose money because market went up in between. So use it only if you want to hold it for very small period of time. It is very enticing for a new users to think, man, I can double my money, I can 3x my money. And there are issuers who will come up with these products because they make tons of money from us. So don't do it. Okay, these were the random number generators, right? So you can also say, hey, the the situation is always not that random. Which stock goes like this? I know many stock does, but you can have that complaint. So I went ahead and looked at Tesla, and these are the real numbers. I'm looking at Tesla. Okay. So start date is picked up some start dates. April 30th to end of May. Tesla was $161 on April 23rd, right? Now at the end of May, Tesla is $178. So you have a change of 10%. So Tesla is up 10% from last April, and these are all the historical data, to end of May, up 10%. If you are on 2x daily TSLL, you should be up 20% at least, right? It's a 2x leverage product. You're actually, so TSLL was trading at $8.68. It is down 12%. What gives? And I know TSLL is favorite. I see on Twitter, and I do, and I got into kind of a little heated argument with someone who was buying TSLL and selling covered calls against it. I'm like, why you bought an underlying which has got so much of a drag, then you're trying to cover up for the drag by selling covered calls. Oh, I didn't understand how would you want to inventory it and then trying to recover from it. Don't hold it for longer. We can, and I'm not saying that it always like the case. There may be a time period between when it actually does what it's supposed to do, that it actually gives 2x. So can you explain more about TSLL? TSLL is 2x of Tesla. So it basically replicates, it's a leveraged instrument on Tesla. So if Tesla goes up 1%, let's close. If Tesla goes up 1%, TSLL will go up 2%. If Tesla goes down by 1%, TSLL will go down by 2%. It is 2x leveraged. And that's all I'm saying. If you are leveraged, then after whatever, a year, Tesla is up 10%. If you were holding TSLL, you are still down 12%. You should have been up 20%. You give me a time period. I think there will be some time periods when the stock has not been volatile and TSLL will do what it's supposed to do. But then how do you know what's going to happen? How do you pick the right time period? So that's why I said, don't hold it. The longer you hold, the more the risk you have that it's not going to behave the way it is supposed to if the underlying is volatile. If you picked NVIDIA, I think it will work out for you. Because NVIDIA is, only in one direction. So if you picked up NVIDIA, NVDL, and NVIDIA has not been going up and down, there's not much of a directional volatility, probably it will be, NVDL might play out. But then you don't know how the underlying is going to behave. Why Tesla is up 10%? These are the values. That's how the leverage products work. They will reset it on a daily basis. So starting, and you can look at the values. I just use the Google Finance function to fetch me the values, right? So basically, it gives me TSLA 430, it's 161. You come all the way, whatever, to the last, 531 is 178. TSLL, starting 868, ending at this. This is how the leverage product daily mechanism works because the stock has been volatile. Right? We can pick up some other time period also. And there will be some time period when the volatility will not be there. And it might be up 2x. So that's why you need to understand how these products are structured. Don't get sucked into the fact that it is 2x leverage means it will actually give you 2x leveraged. And these are not my numbers. These are now real numbers. These are not simulated numbers. Right? TSLL is trades publicly. I mean, you can find it TSLL here. If you go back and look at those values between these dates, is what you will find. It actually started at 868, ended at 765. How do I get this info? I mean, Google Finance. There's nothing much complicated. I just use a Google Finance function. I just plot it. And do you know that these happens on a daily mechanism? So I figure out what's a daily percentage change. You double X a daily percentage change, then you get your, what the new value should be. Right? But it doesn't behave the way we think it will behave if you try to inventory it over a longer period of time. There will be periods of time when it will behave because the stock hasn't been volatile. So be careful. Understand what kind of a product you are getting into. 2x, 3x sounds good. And recently SEC has allowed, I think, 2x on, or maybe 3x on some individual stocks. Issuers will make money. You need to know what you are getting into. Leverage products have a place in portfolio management, not for holding, not for inventorying it. Use it to hedge a risk, an event risk. So leverage products should be used for as an event based to hedge an event risk and not buy and hold. Okay, maybe this is the last time I'll bring up this leverage ones, but I'll tell you, I get so, I don't know, feel so sad or pissed off, call me whatever you want to, when I see folks getting into these leverage products. I'm like, understand the structure of a products, right, before you get in. Anyway, that was my spiel on leverage products. We can skip this. Let's jump on to, let's skip this because we talk a lot of other things. So I want to get into the AI stuff. What stocks did I buy or sell? I bought SEHD, I bought Google, Amazon, Meta, CrowdStrike. Reason, I think so Google, Amazon, Meta, they all fell down after the semis, after president and prior president made comments around semiconductors, which I felt was an overreaction on these one. Only time will tell. But I thought maybe I should buy when they are actually cheaper, when the others are selling. So I bought this. What did I sell? So at BTC, I bought opportunistically on 7.5 and now it's been up like 20%. So I sold that. I did not want to increase my exposure to crypto side, but that was an opportunistic buy. So I, got out of it. TTD I sold. I had a valuation concern on trade desk. Still, I think I do want to hold it for long term, but a little more concerned around valuation. How long did you hold TTD? I still hold TTD. I'm not sold. I still hold FBTC. So the portion that I bought, which was opportunistic portion, only that I sold. I mean, my investment thesis on Bitcoin is for 20 years. I'm not even halfway through it. But that doesn't mean I should go and I have a limit of how much percent I want to put in it, and I don't want to increase that percent, which I increased 2 weeks ago on 7.5 when I smelled an opportunity, and then I got back to my normal percent. So I still hold FBTC. I still hold TTD. I sold 30% of my holdings on TTD because I think it's got too overvalued. And I still hold the rest of mine. Okay. So first I started accumulating in 2022. So this is my first sale on TTD. Any other questions on any buys or sells? Again, not a recommendation. Don't go, and you need to understand your thesis behind trade desk. How big is it part of your portfolio? And and when did you buy it, etc., before you take any decision. I share this because we do talk about stocks, and I want to be transparent of what stocks I buy or sell. When you say you bought, did you buy put limit order? No, FBTC, there are no options. So there are no options on any of the Bitcoin ETFs. Options have not been approved. If options are approved, then I might become a little more active on Bitcoin ETFs, because then I can sell a put, and then maybe I'll reduce my other holdings on Coinbase, etc. No, I mean, did you sell Crowdtstrike, Meta, Amazon puts to get extra premium? No, these ones are like, I just bought some stock. I already have an iron condor in Meta. I have iron condor in Amazon. So if it falls more, I'll probably will get to buy a little more of it. A CrowdStrike was just direct purchase. But on Meta and Amazon, I have of course, I have iron condor, so one side is put spread. But if it falls more, then I will basically buy it anyway. Did you buy and hold any bond ETFs? I have a TLT. That is the only bond ETF, I guess, I have. Is MSTR still a good way to play Bitcoin? I think, yeah. If you want to play Bitcoin, now I think we have these ETFs, those are better ways. MSTR has got a lot, probably will have a lot more volatility. And then they got a Michael Saylor specific, company specific risk. So if your idea is to, I want to get an exposure to the Bitcoin movement without being bothered for holding, and custodying Bitcoin, or opening an account in a Bitcoin on a crypto exchange, these ETFs are good ways. Now they have multiple ETFs, and they're not super expensive from expense ratio. So now I would not use MSTR or any of the other proxy players. There's no need to use the proxy players anymore. There is no need to use Coinbase to get exposure to the movement of Bitcoin. Use Bitcoin ETFs. You get, direct 1:1 movement exposure.
Hi, Vivek.
Yeah.
So along those lines, when that ETF went live, I was thinking, oh, MSTR is going to tank. What's the point? Because again, everybody was kind of using MSTR as a proxy, but it's very, very volatile. But yesterday I think it was up almost 200 points, if I'm not mistaken. So why are people still buying MSTR then if they can get the ETF instead?
I don't know, maybe because it is number one, it is more volatile. So some people love to have a higher beta. Number two, it is optionable also. Right? So if you want to buy calls, you can't buy calls on FBTC. Right? And a lot of people would love to go and buy out of the money call and hold it. You can't do it on FBTC. You can do it on Coinbase. You can do it on MSTR. So I thought so I was trying to address Sachin's question is, if you want to, instead of buying Bitcoin, you can just buy FBTC, but you can't trade options on Bitcoin ETFs. They have not been approved yet.
Oh, okay, maybe that's it.
Yeah, that may be a reason. Number two is any of the, no, I think now the companies can buy FBTCs. So I don't think that is a valid reason that if institutional investors were looking for it, earlier they did not have any other exposure. They were like stuck with MSTR, but now they can buy FBTCs. MSTR also announced a split, yeah. So that might have generated some more interest. So I guess higher beta as compared to Bitcoin, and optionality, optionable, and split announcements. So these may be the factors that contributing to MSTR rise. But I would not do it any again, with the ETFs coming in, there is no reason unless you really want to trade in options, no reason for us to go out and try to buy the Bitcoin proxy. Buy something which is anyway very close to Bitcoin, which is the ETF. All right, let's talk about AI. And $600 billion AI question that we need to know. We should have known it like 2 weeks ago. That's when I think I first read it, but we couldn't cover it last week. So now I'm trying to cover it at least. Let's finish it, finish it this week. So we've seen all around, we've seen in the market, like NVIDIA is up, whatever, 150, 200%, gazillion percent. AMD is up gazillion, SMCI is up like trillion percent, and everything related to AI has been going up, right? You add a name AI, the stock goes up. We see CEOs and CFO, not CFOs, but CEOs of a companies that have nothing to do with AI will drop in a verse AI because that helps the stock market, their stock prices. So last year, we also went through this $200 billion question. The question, and this is a letter published by Sequoia. And I don't have to talk about details about Sequoia. If you're in a Bay Area or if you're anywhere closely related to tech, you know who the Sequoias are. They are the biggest, most respected, venerated player in tech ecosystem. Their most recent win, Google I think there are rumors that Google is going to buy the cybersecurity company Wiz for $23 billion. Seed investors, Sequoia. So Sequoia is known, for their investing prowess. So I don't know the name of the partner, but last year they published a paper called $200 billion question. Now this is kind of a revision of that paper, right? That time there was a $125 billion hole. When I say hole, means companies are spending X billion dollar on the capex related to AI. And of course, at the end of the day, you have to show the revenue. How much revenue are you able to generate from your AI spending? So last September 2023, that difference or the hole or the gap was $125 billion. So now, this week means almost 2 weeks ago, NVIDIA became the most valuable company in the world, probably I think a month ago. Now, if you look at this, right, revenue required for the payback of all the investments that have happened. And the methodology of that investment is they're looking at how much is the revenue of NVIDIA data center. So that's the information that is publicly available. Then you extrapolate from them, because if a companies are buying NVIDIA GPUs for their AI workloads, then they will also have some expense on the data center. They will also have some expense on the power and everything else. So the whole idea is that 50% will be your expenses beyond what you give it to NVIDIA. And then another add you 50%, you add your software margin, right? So your COGS on an average. Now, with that, you come out to be saying, for end of 2024, I need to have an AI revenue of $600 billion to justify all the spend that is happening in AI. Okay. I'm not going to go through the letter. I'm going to give you some salient points. So, what do we have currently for AI revenue? We have what, $3 billion or $4 billion? Microsoft, I don't know how much Microsoft making from Copilot. The only company that currently is generating any revenue from AI that can be attributed to AI is ChatGPT. And I think here the numbers around wait, I thought I saw some numbers. ChatGPT is maybe around $4 billion. Yeah. So what has changed since September 2023? Supply shortage has subsided, still not over, but is relatively available with a reasonable lead times, not as crazy as it was, last year, when there were like everyone was clamoring for chips, and NVIDIA could choose who to give, who not to give. The constraints have not, the shortage is now at least better. We are moving in a better, in the right direction. GPU stockpiles are growing, right? NVIDIA reported in Q4, half of the data center revenue came from Microsoft, basically large cloud providers, right? So all these cloud providers, Microsoft, Google, Amazon's, they are all stockpiling and just buying these NVIDIA's chips, thinking that they will be able to use it profitably in future. So right now it's all grabbing going on. Right? Third, yeah, this where is OpenAI has a lion's share of revenue. It's like up $3.4 billion in the recent quarter that they reported. Right? So overall, and then they talk about, consider how much value you get from Netflix, Spotify, etc., etc. AI will need to deliver significant values from their customers to continue opening their wallet. So basically, the comparison is between the investment done in internet and the investment being done in AI. And for AI, we have right now nothing much to show about. So the whole, that 125 billion is now 500 billion whole. Right? And it's not over yet. NVIDIA will be coming with the new chips, right? Blackwell. So right now, everyone is looking for H1000. NVIDIA already announced their Blackwell chips. So Blackwell chips, when they start to come in, your current chips will depreciate like anything. Right? That's what happens. Same is the case on the LLM software models. Once the ChatGPT will release 4.0, ChatGPT 3 is almost useless. So there will be a lot of, I would say, the depreciation costs that these companies will have to face, and they'll have to spend more to get the latest Blackwell chips, right? So that another final surge coming on. One of the major rebuttals to my last piece was GPU capex is like building railroads, and eventually the trains will come, and will the destinations, right? That's what we say. Once we build, they will come. Internet 2000, we had the same concept. Once we build capacity, means your fiber capacity, broadband capacities, data center capacities, once we build, they will come. What happened to those broadband companies? Some of them went bankrupt. The Exodus Communications, right? Data center companies went bankrupt. So let's talk about railroads. Railroads haven't been a great investment either, right? But what happens? There's a difference between railroads and GPU stuff. Lack of pricing power, right? In railroads, if you own the track between San Francisco and LA, you own the track, right? That's a kind of a monopolistic. Used to have that monopoly when the railroads started, because there is no one else building that railroad. In GPU, they are turning it to commodity. And also we are seeing that other companies like Google is coming up with their own GPU designs. Amazon is coming up with their own GPU design. They have the chips for both inference, I call Inferentium, and the Trainium. They have the both for training and inferences. Amazon is coming up with their own chips. Microsoft is designing their own chips. So there is a competition. It's not going to be a monopoly in GPUs. Right? Without a monopoly or oligopoly, high fixed cost plus low margin cost business always see the prices competed down to the marginal cost, like airlines. High cost, but no monopoly, you gets competed down, and hence not the best investments. Investment incineration. Speculative investment frenzies often lead to high rates of capital incineration. Looks like there's a book that talks about many of such. This is not the first time. So if you want to read the book, looks like The Engines That Move the Markets is the name of the book. Of course, we talked about depreciation, which depreciation expense that these cloud providers will have to take. And finally, winners versus losers. I think we need to look carefully at winners and losers. There are always winners during the excess infrastructure building. AI is going to be the next transformative technology, no doubt about it, but we need to figure out who the winner could be. If my forecasts come to bear, it will cause harm primarily to investors. So the founders will benefit, company builders who are building the company will benefit, the investors who are investing money at such a frenzy valuation may be the losers. Consumers will benefit because this is a transformative technology, just like internet was, and maybe bigger than internet. But let's make sure that we understand that great transformative technology doesn't always mean great investment. It depends on what the price that you pay for the technology. Has internet changed the world? Yes. Cisco is a backbone? Yes. Or any other internet company. But if you bought internet shares at the 2000 peak, I don't know when the peak will be. That may not have been a great investment for years to come. So that's the difference between great investment. That means two things come in. Number one, great company and reasonable pricing. Great company, excessive pricing is bad investment. Great company, reasonable pricing is a good investment. Great company, pricing with margin of error is a great investment. What we don't focus on is the pricing side. We look at a great company, and then if we buy it at a excessive pricing, it's not going to be a great investment. Invest in it if you love technology, but then don't blame it that you didn't make money from it. Yeah. So that's a net. They were talking to, the whole article was talking about that we need to make sure not to believe in a delusion that has spread currently on AI, that as if it is going to be the best ever investment ever. Now, will this continue for a year or two? Maybe. And that's the challenge, right? That's why I've not sold all my NVIDIA shares. Or that's why I've not sold off my, I still hold semi companies in my portfolio. We don't know how long we'll continue. But let's be cognizant of the fact that buying a good company, buying a transformative technology at any price is not the best investment. You also need to look at what are you paying up for it. So that was one report which questioned the valuations that are being accorded to these AI companies. Then there was another report from Goldman Sachs. This was like 2 or 3 pages. This damn thing is like almost 40 pages. So I'm not going to bore you with the 40 pages, but I guess I'll give you some snippets of the interviews from one MIT professor, and then there is a Goldman analyst. So this MIT professor has written a few books. At the end of the day, his analysis is that only 4.6% of the manual tasks that are being done will be impacted by AI. So today, one of the biggest, I said the proponents, the factor that the proponents of AI use is productivity gain. And I've seen productivity gain in myself. I ask ChatGPT all the time if I were to do, any of this, if I were to need any help in coding or scripting, it helps me. Even I asked Copilot today morning about some information, and Copilot gives me the latest information. I may have to fact check sometimes, but yeah, it helps in productivity. But does it gonna help in every kind of a routines or every kind of a work? No. So there are different studies, and people have a different viewpoints in terms of how much of the task can be automated. This professor says 4.6% will be impacted by AI. Combining it with a labor cost saving of 27%, it translates to productivity increase of only 0.66%, or even lower because some of the tasks may be complex. which translate into 0.9% increase in GDP, which doesn't sound much. 0.9% increase in GDP, and here we're talking about spending trillions of dollars on AI. That doesn't look great, right? So we got a rebuttal here from a Goldman Sachs senior economist. So first of all, I have my own concerns of economists, but let's go through it. So his assumption was that AI will automate 25% of full tech, whereas professor had only 4.6%. Okay. What Goldman Sachs says is AI will create a new job that doesn't exist till now. So it's going to be net additive to the GDP. Right? So difference in these two basically assumptions, 25% versus 4.6%, is what driving the difference between these two opinions. So Goldman Sachs says GDP increase will be 15%. Professor says GDP increase will be close to 1%. So here they try to show the difference between baseline and professors like a 0.5% or whatever, and a 15% impact. You figure out where to lie between these two. Net additive will happen. Today, I think 60% of the jobs that we in US are involved in did not exist. 60 or 40% of the jobs. There was some stat in the report, I forgot. Maybe 40% of the jobs didn't exist 60 years ago, or maybe 60% of the job didn't exist for whatever. So the idea is these new techs will bring in new jobs. The question is, what's the magnitude? How big will it be? And then additional 6% they added for whatever, I don't even know. So I think 9.2% they're able to explain. So let's stay at 9%. So there's a gap between 9% and 0.5% of GDP growth that can be attributed to AI. Now, depending on your own personal preference or opinion or your investments, you could lie anywhere between these two. Okay. But I guess these two reports have caused some more flutter in the investment. I heard some fund managers referring to these two reports around. Now there is a chatter saying, AI is not that great as what we thought it would be. So don't be surprised if we see some more correction in the AI specific stocks, or the stocks that have been driven by on the hype of AI. Because I'm seeing even on a CNBC, they are talking about, and I think there's another third report. I couldn't get to that report. There's one more report that came out, which was around debunking the whole AI myth and AI hype. So actually there are 3 formal reports that is being circulated, and people and investors and investment managers, they are taking notice of AI we have to trade cautiously. Right? It's not that it's it's not a unlimited treasure. So I thought I'll share this report. It's a huge report. It's multiple interviews, but I'm looking at 10% productivity gain, or it's going to be 1%. I guess it might be somewhere in between. So you manage your portfolio accordingly, because people are starting to question all the AI gains that we have been assuming so far. Do you have a link to this report? I think I will report downloaded. You search for the Sequoia, just Google for Sequoia 600 billion. It's open. I mean, both the reports are available for public viewing. So there is not behind paywall. If you Google for it, you will just find it. I don't have the link handy right now. But if you give me a moment, let me see if I can find out where is it in my folder. The Goldman Sachs report. Oh, 1 second. Let's see. Is it in this folder? Recent downloads, Goldman Sachs. Oakmark Funds, Washington. Or maybe I moved it to a different folder. Oh, no. So I have this one. At least I can. How do I attach? Can I attach? Okay. Yes, I can attach. I am putting a Goldman Sachs from because that I have it. Oh, Goldman Sachs AI report. There we go. Okay, it's attaching. So I just attached the Goldman Sachs AI report in the chat. The secure is a web page, so you just can Google for it. All right. So that's on AI. And we also saw a couple of companies that reported results. Both are related to the semi. So let's go through the results and then we'll see, is it anything to do with the results or was it something else? So let me go back. So two companies that reported results were ASML and TSMC. So let's go through ASML quarterly results. All right. So net sales are up. Okay. So we'll see the headline numbers. Maybe let's talk. Let's first talk about the headline numbers and then we'll look at the earnings. So headline revenue is down 10% year over year, 6.2 euros. Gross profit down, gross margin is up, operating income down 20%. So majority you see down, cash flow was up, EPS is down 19%. These are just the headline numbers, just based on numbers. But they beat on both revenue and net income. So they did better than what the analysts were predicting. One good thing was the bookings are higher, and I'll have a little more note on booking. So this is a company ASML, which creates machines that chip manufacturers need to create chips, right? So we see 2024 as a transition year, and this is nothing new. They have been talking about 2024 as revenue to be the same as what 2023, and because they're also doing investments in the capacity ramp up, they expect the growth to resume from 2025. So nothing new. I didn't see anything that would surprise me in this report, except the increase in bookings. Capital allocation, they declared interim dividend on 1.52 euros, which will be paid on August 7th. And they also do buybacks. So it's a company which does buyback as well as dividend, also pay dividend, do buybacks. What else? Business side, their EUV, which is their lithography machine, it was down 16% because in this quarter, they focus a lot more on immersion machines. But good thing is the bookings were up 24%. Booking was a concern in Q1 because booking fell down from almost 9 billion euros to less than 4. Now it's back up to close to 6 billion euros, right? Total guidance, still, between 6.7 to 7.3 billion euros. I think they're targeting at 7 billion euro for Q3. 2024, net sales will be almost same as 2023. This is what the line that they've been maintaining right from day one, ever since they started talking about 2024 guidance. Annualized tax rate, ignore it. 2024 is a year of consolidation. They already said that. The booking guidance does not include the latest machine, which is their high-NA machines. So if I know last quarter, they supplied Intel with their first high-NA machine. I don't know where the stage Intel is in terms of testing and everything else. But if they see more demand from other fab companies for high-NA, that will basically increase the booking. That currently booking guidance doesn't include any high-NA machines sales. Expect growth to resume in 2025. Stock was down 12%. after the earnings came out. When I'm looking at earnings, I'm like, what's there for the 12%? There is no negative surprise that I see in this earning. But things, guidance a bit lower than analyst expectations. Maybe analysts are wrong in expecting that, right? The biggest one, I think, are these two, which are geopolitical issues. Biden administration say that they're going to put more restrictions on semi-cap equipment to China. And Donald Trump raised questions on whether he would defend China. And even if he defended, so whether they will defend Taiwan against China, and why should US pay for the defense of Taiwan? So
Vivek,
with these
that was Vivek. That was a negotiating tactic.
Yeah,
Korea to pay more money.
Exactly. So he never said that we're not going to defend. He said, why should I pay? So eventually we will get some more money, maybe from NATO's or other companies, other developed companies who need the chips, and they'll still defend. So it's all geopolitical rhetoric. So I don't.
Taiwan pays for its arms. Ukraine doesn't.
Yeah.
But he wants South Korea to pay more.
Yeah. So anyway, I mean, my whole idea was that I don't think we're gonna. This is an overreaction on the ASML stock perspective based on where it was trading. It's a different question if you want to ask, is it cheap? Right. So we'll look at that as well. So if I'm looking at trends, year over year, yeah, it is down, and they told that it's going to be down. 2024 is going to be a slow or consolidation year for them. And that's the expectation that market has been telling. Look at 3-year CAGR, it's still fine. Revenue growing at 16%. I mean, still a good. Can't expect to grow 50, 60%. It's a big capital intensive. I mean, each machine costs like 350 million. Right? So, but I don't see any big weakness around this, right? Nice, decent operating margins, good net income. And then I run it through the criteria, and it works well on all the high quality compounder or Buffett filter criteria. Where I have a little challenge, of course, CapEx, because they've been investing, so I'll ignore that one. The biggest challenge I have is evaluation. Right? So I was running through my evaluation. I was like, I will add more to it if it is close to 850, 860 kind of time frame. So I'm not going to add it to at like 900 plus. Even it has fallen down, I'm not going to buy ASML because I have little valuation concern, but I don't have a company concern. So it's not a bad company. Just because the stock has fallen down, it's not a bad company. It ticks all the good things that I want to see in a company. But does it mean that it's a great company? Does it mean it's going to be a great investment if I buy it today? I have little doubt on that one. I could be wrong. I mean, markets can stay crazy, right? But I think right now it is overvalued. My target price on this will be anywhere around 860, 850, 870. So I have an iron condor with a short put near, I think it's 870 is a short put. And so if it falls down by 870 in August, yeah, I'll pick some more. So that's how I look at what I want to buy. Then I'll basically sell a put, or in this case, I also hold a stock. So I sold an iron condor. So that's ASML. So I have no concerns on the company or its business. Forget about that. The stock was down 12%. Right? The other company was TSM. So let's look at TSM. Taiwan Semiconductor. Okay, TSM. Well, these are some notes I just added after every earning, a summary. So headline numbers, revenues up 40%, gross profit up 38%. So this is in a other direction of ASML. right? Operating income up 42%. Net income up 36%. Operating cash flow up 126%. Right? But okay, so ASML, not this one. This is the ASML stock was down 12%. And on the same day, TSM stock also fell down because both are related businesses, right? So after the comment from Donald Trump, the stuff that we already talked about. So TSM stock also sold off on that comment. So if we go back and look at TSM's stock, I think ASML reported result a day before, not AS. So this fall that we see, this fall came on after the comments from Donald Trump, and the stock fell off. And then they reported the result. Results were not bad, but I guess market is now given up on, okay, anything related to chips is bad. So their revenue from a tech perspective, 35%. So they call anything 7 nanometer and lower are high tech chips. So almost 70% of the revenue is coming from high tech related chips, right? 30% is rest. From a platform perspective, HPC, which are these cloud providers, like including Alibaba's of the world, they are like 50%, 33% is smartphone. Okay. Now, I actually listened on to their earnings call also. There's some funny stuff in here. I liked the chairman and the CEOs, the way he talks to analysts. It's pretty open, very informal. I loved it. So management commentaries, third quarter. So for both in first and the second quarter, they are seeing the weakness from a smartphone perspective. Smartphone is actually down. Same was the case in the first quarter. Smartphone was down quarter over quarter. Now in the third quarter and the fourth quarter, they should see some smartphone returning into the growth areas. I think it's a cycle that goes on. First 2 quarters, they don't see much of, those are down as compared year over year, and the last 2 quarters are up. So that's why I'm saying we expect our business to be supported by strong smartphone, and of course the AI related demand that we continue to have. When analysts asked him about, because I think it's last year, he talked about that there is so much of a demand for the chips that we cannot meet. So analysts asked them, hey, how about attaining your balance between supply and demand? Are you now able to, attain that balance? This is what he had to say. I also try to reach supply and demand balance, but I cannot today. Right? The demand is so high. I have to work so hard to meet my customer demand. Maybe sometimes 2025, 2026, I can reach the balance. So the company is still seeing a lot of demand from chips because of these whole the capex that we discussed. Microsoft plan to spend like billions and trillions of dollars. Google want to spend billions of dollars. AWS want to spend billions of dollars on chips. And there are only 2 big chip makers when it comes to these high-tech chips. Intel still doesn't make those high-tech chips. It's either Samsung or it's the TSMC. TSMC is the biggest player. They make 90% of these high-tech chips that are sold. So there is no other option. And not once, 2, 3 times he told, I have so much demand. Like, we're working really, really hard. Believe us, we're working really, really hard. But I just can't meet all the demand. Okay. Guidance is okay. Profit margin, gross profit margin for a manufacturing company, almost 55%, which is good. Operating profit margin, it's fine. There were questions asked on the net profit margins. If TSMC wants, they can increase their price. I think it's for both. And both the CEOs are very long thing. I mean, ASML had a new CEO, but I think probably is going to carry on the same tradition. They are long-term thinkers. And TSMC was specifically asked around pricing, that you have a pricing power. But he's like, no, we don't want to, do price gouging. It's a long-term relationships. I don't want to just increase the pricing right now to get more margins. So we need to work with our customers and, have a pricing that works for both of us. And I think last year I also heard ASML CEO they're also pretty clear, because ASML has got a monopoly. There is no other second option for EUV machines right now. But they say we're not gonna we focus on really long-term relationships, and this doesn't bode well for long-term relationship when you try to do price gouging. So same, I heard CC Wei, who is a chairman, talking on the similar line, which I like. They look at a long term. Right? Financial numbers, there's nothing to complain about. 40 like on year-over-year or 3-year CAGR. Trends are good, decent year-on-year growth, 3-year CAGR, everything looks nice. So I'll hold it. I'll hold it. Okay, so this doesn't include the latest results, but again, I think ROI 18%, yeah, less than what high quality compounders, I think is around 20% is what my threshold is. But yeah, 19% is still fine. Insider ownership less because the company is pretty old, so I'm not concerned about it. CapEx is higher because it is a CapEx intensive company. So hence they have a higher depreciation margin, investment, so EPS growth is not there. But I think I still have a valuation concern. So anything below 160, maybe I'll add to it. But until then, I'll just reduce the cost basis. Just sell options against it, reduce the cost basis. So now it's 165, maybe 160, etc. Maybe I'll pick something. Business-wise, still looks fine. And I don't know who's going to win the AI race, whether it's going to be Apple chips, Google chips, NVIDIA chips, AMD chips, or which did I miss? Oracle chips, AWS chips. All I know is everyone getting their chips made by TSMC. And Sachin says Sony and Canon are building alternatives, so no monopoly stay forever. That is true. That is true. Canon, in fact, have a build EUV, but they use a different way. And I think they have shipped some of the machines for testing purposes. But it will take a few decades because it is the whole supply chain and the ecosystem needs to be there. It's not just that you can rip and replace a machine. So I guess, well, enjoy the monopoly as long as it stays. So I guess it'll be a decade before Canon can actually replace it. I didn't hear about Sony, but Sachin, you know a lot more about this industry than I would, but I'll research on Sony. I know Canon recently came up with the new options. It's not new option, new machine. Chandra says, can you give your take on EXP, SQ? I'll take a note of it. Next week, I'll bring it. Any other stocks? If not, discuss SMCI. Oh, we didn't discuss SMCI. I have my own concerns on SMCI because it's a low margin business. Plain and simple. It's a low margin business. And I had that concern right even last year when everyone talking about SMCI, I just couldn't get myself to buy SMCI. It's a low margin business. So stock has been up, that's great, but the business profile I wasn't really attracted to the business profile. SMCI dumped a lot. I don't know where it is. Oh, come on, it's still up like $700. I don't even know why is it at $700. That one I feel it's too much. Did you sell any? Oh, okay, I think that's related to SMCI. Is TSM valuation also high? From my perspective, I feel it is high. So I'm looking at. So let's look at the valuation, right? Let's bring that up. TSM. Oh, this is. Oh, that's not TSM. This is the wrong one. Okay, there's. Oh gosh, TSM was underneath that. Load up. All right, let's bring up TSM. So TSM. I went to a reverse. So this company is so they had close to, let's say, $9 billion, because that's what I don't want to look at a free cash flow, right? Like I want to look at, let's say, real free cash flow, which is after deducting the stock-based compensation. Terminal growth rate, they'll grow 4%, let's say discount rate 10%, which is like mediocre is. Now let's see with this, how much do you, oh, hold on, what did I delete? Okay. If the company grows its free cash flow 25% year over year, then intrinsic value is like $150. Last 5 years, average free cash flow growth has been 20%. Right? Revenue growth has been 17%. Market cap has grown 31% over last 5 years. Analyst estimates is revenue growth 14%, EPS growth 15% year over year. I'm even giving them a more generous 25%. Now, purely from a free cash flow, DCF modeling for looking for, today, let me tell you how much is being priced in. So what are they pricing in? 30%? No. 28%? 26%. Yeah, 27. 160. 27% growth in free cash flow has been priced in. Do you think it can do it? Last 5-year average has been 20%. Last year, did they actually increase the free cash flow? I don't think. What did they do last year? Okay, I don't have the latest. Oh, sorry, TSM, I don't have the latest data. So I need to add, because the website didn't have the latest data, so I didn't have it. But if I look for, let's say, 2023 yearly data, free cash flow margin, where's free cash flow growth? Free cash flow growth has been, okay, last year free cash flow growth was negative, but I don't want to dunk it only for, let's say, 1 year. So that's why I go for 5-year average. Right? So, but if they do it at 30%, yeah, then the stock is undervalued. I want to give myself a little room for error. I'm like giving them a generous 25%. That comes out to 145. And I know right now it does not include the latest results, so might be a little better. So that's why I'm looking at 160. Again, there's no right or wrong answer, right? It's some numbers and then some story. Investment thesis is not one thing. You need to have a number and a story. It both needs to be there. Just numbers is not a thesis. And just story is just a fairy tale. Story without numbers is a fairy tale. Okay, do you think the so-called rotation to broad is healthy, or are we seeing something as last couple of weeks the markets are trending down? I think it is healthy because we saw a SPY down, and majority of the stocks in S&P 500 were up. So it means the other stocks, the other 493 stocks, are actually now getting some attention. So I tweeted about this similar stuff. I think maybe I have this, right? Yeah. And this is a little old tweet. Right. I was like, I'm planning to add SCHD instead of SPY. SP had a great run for the past 18 months. YTD is up 17%. ACHD, which has more dividend paying companies, will have a lot of financial companies, other companies that are not growth companies, but more dividend paying stable companies, have been depressed with a YTD return of only 0.52%. However, SPY PE is 29, dividend yield is this, SCHD is much cheaper, and with the higher dividend yield. In times of turmoil, dividend paying stocks tend to hold their value. So they return capital. They have a better balance sheets, right? And investors will flock to it. And SPY no longer represent the market because most is driven by AI. So I'm not getting a diversification as well. ACHD top 10 holdings, if you go and look into top 10 holdings, you got some you got a Home Depots, you got a tech, tech, you got medical, pharma companies, etc. It's more diversification. So I'm like, I'm planning to not add to SPY, but move more to ACHD. This I think I tweeted maybe not this week, probably a week or 2 weeks before, and I think so at least SCHD has done better. And it's got a decent dividend yield. Where's the dividend yield? Right now, it's like 4% dividend yield. And it's got a good companies. And I'm like, maybe I'll rotate from SPY to ACHD. Okay. Okay. And yeah, this was, I think, a comparison chart. June 12th. So we are almost like 8 days ago is when I picked up this data. Okay. So this is what I'm doing. You do what you think you want to do. Okay. I already talked about why SPY is not as diverse as it used to be. So we already looked at this. Yeah, I think. What are the top 3-5 companies we should be adding here for long term? I can't tell you. I don't know what else you hold. What kind of investor you are? There's a problem. Even top companies will go down 50% drawdowns. If you are not the one who can withstand that 50% drawdown, maybe stick to ETF. Or maybe you already have my biggest allocation now maybe Apple, because there is always a challenge between Apple and Mercado Libre. Would I want to add more Mercado Libre at today's position? Probably not. Maybe it fall down. Maybe yes. Right? So it's a very difficult question without having looked at the other person or knowing other person emotionally, how they will behave, and what else you hold in portfolio. It is impossible to say which is a good company for you. Mercado Libre is a good company for me. The stock has been down 50% from 2020s. Right? May not be a good company for you if you can't withstand that volatility. What do you think about BlackRock? I've not looked at BlackRock. Financials work little differently than the other company in terms of the way you want to evaluate financial companies. Most of I think the evaluation works on the book value. Right? I know that any companies that are involved in investment banking, IPOs, debt offerings, probably will see better second half of the year than the first half. That's why if you are interested on the financial sector, try to look for the financial companies that have like investment banking areas like Goldman Sachs, right? JP Morgan. It's a normal bank, but it has got a big investment banking house, right? Not like Wells Fargo, because Wells Fargo doesn't have that big of a Wall Street presence, but they have a much more of a retail business, right? With the rates going down, we'll expect, and of course, also with the maybe change in the guard in White House, we may expect more M&A to happen. M&A is dead. Mergers are dead under Lina Khan. Nothing much is happening. But if an administration change, we may see more that happening. We may, and if a rate cut starts, we see rates being cut down, we may see more IPO coming to the market. And yeah, so on both these cases, the firms that have got a bigger presence on the capital market side of the business and not the retail side of the business will benefit. So BlackRock probably will benefit from there. I mean, they are the biggest money managers in the world anyway. And they have had a very successful Bitcoin ETF, now Ethereum ETF. Again, I've never looked at BlackRock as an individual company. That's my overall thesis. So that's why for my financials, I just stick to XLF. Welcome, Ravish. They did fine last 2 weeks. Yeah, we had a financials earnings out. Your views on oil and gas for next 2-3 months? I don't know. I mean, oil and gas energy sector is very like one of the cheapest sector available. Financials have run up. They ran up like last 2-3 weeks, but energy is still available at a very cheaper when from a valuation perspective, right? If you look for PE of energy sector, etc., as compared to the rest of the S&P, is still very cheap. But there have been news around, Trump comes into on the White House, drill baby drill. Right? They're going to bring down the cost of oil to what, 60 barrels, $60 per barrel. So I don't know how. I know some of the big companies will survive because there, I think, threshold is like if it is above $40, they'll still survive. But I don't know. It's been little impacted by this politics also. But sitting today, forget about what might happen tomorrow. Energy sector is available at much cheaper valuation than the rest. And I always will have some exposure to energy. I want to keep portfolio diversified. So mine is what XLE. Did you explore LSCC? Seems a good one from profit and operating margins, also from free cash flow perspective. But Lattice works in a very specific niche area, right? On FPGA, field programming gate arrays, something. So basically, which will allow you to change how your chips work. Once you've installed the chips, you can change it afterwards. So I was actually talking to a person who's a director of, I guess, engineering in LSCC to understand what these FPGAs, how are they different from like others, etc. And they are in a very, my understanding is that they are, there are only 2 companies which do this thing, but the area is very niche. So what I don't know is how big this area could grow. Earlier, there were questions around 5G, because if you have a 5G become very prevalent and IoT, then there was will be a lot of demand for, let's say, FPGA chips. Haven't seen that materializing. So that's a little concern on the overall market size, but there are only 2 companies. One is, I think, bought over by AMD. Xilinx was another one which was focused only on FPGA. Another one is Lattice. So, yeah, I mean, if you like, take exposure. Yeah, Lattice doesn't qualify to. I'm being careful to add more tickers to my portfolio. I'll probably add maybe ANET more before I add Lattice. So, not for me, but maybe a good company and addressing a niche market and probably maybe the best one in this, but then not for me in a portfolio, maybe for you. That's my thought on Lattice. It's a very niche market. Pipelines to deliver oil too, which is halted by Grandpa. Yeah. They're gonna go all the way. how would that a selling may go away work this year? Who knows? Well,
I mean,
it's
this,
only in hindsight we'll come to know.
I know exactly. I mean, but you see the volatility is still continuing, right? I mean, even the small caps last, if you look at trading days, have not done that well, and tech is pulled back as well. You think this trend continuing for maybe this couple of quarters going down? And how many rate hikes does your crystal ball say?
So
Rate
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 hikes, I
cut,
think,
rate cut,
right?
sorry.
Sorry, rate cuts. I heard 2, 3 different variations. I think most probably there's going to be the one rate cut
September, most probably they're talking about.
September, because then it becomes too close to election, right? So and they don't want to be seen as a puppet to the government or do anything which is very close to election. So what I'm hearing is maybe one rate cut.
Mm-hmm. And do you have some study that says, the Democrats come the coming year and or Republican come, the stock market gets affected?
No,
Some
there is. I think that's probably if you go back and look at the election results over the past many decades, I think US will still do fine irrespective of whoever is in the White House.
exactly.
There may be different sectors that may do better.
Yeah.
There's something called like what Biden stocks and the Trump stocks.
Okay.
So, but overall, I think we would still do better. So if you're holding SPY or a diversified portfolio, then we should still be fine.
I know, but I mean, Wall Street is already factoring, the BJT government in the
Yeah.
fall. So they're already factoring in.
Yeah, so we saw all the solar stocks, etc. They sold off, right? Green economy stocks selling off because they're factoring in that who will be the president in the White House. So cool. All right, guys.
Thank you.
Yeah, and thank you for staying over. Wow, this is probably the longest session of last 4 years, I guess. Almost 2 hours 45 minutes. Jeez. You guys have a lot of patience. So thank you for staying along for so long. And I'll talk to you on Wednesday. That's going to be our last options bootcamp session. And then if you're attending that, otherwise, I'll talk to you next Saturday. Bye-bye.